So last week, Intel reported their latest quarterly earnings. Let me tell you, it was not pretty. Earnings declined, revenue went down by 28%, missed expectation, and on top of that, management forgot to increase their dividend. So today we're gonna review Intel, and I'm gonna tell you why it's a dividend trap, and it's probably dead to me for several years now because you know what? It's not going anywhere. Dividend investors, bonjour. My name is Mike Leroux, and I am the founder of Dividend Stocks Rock. I'm also a passionate investor, and I host this YouTube channel to help you invest with more conviction so you can enjoy your retirement. And if you have invested in Intel over the past few years, you may not be enjoying your retirement that much. So far the dividend is safe, no signs of cutting here, but still, results have been very bad. You know, for a while, I qualified Intel as a dividend trap back in the day. So a dividend trap is basically a company will pay a solid yield, solid dividend, not too at risk, but there's nothing more to love but that dividend. And then Intel went from being the leader in microprocessor to adding another business segment which grew super fast around data center. Which kind of makes sense, right? I mean, you're making chips for computers and then cloud's coming in and now you say, hey, you know what? We could have those chips working in data centers because those computers need processors, right? So they expanded their business very fast and they became another old tech with new tech, meaning that they now have the cash flow generated by the PC segment, even though it was slowing down, and growing their business elsewhere. That lasted for a few years and then COVID happened and then we got a big hype over there, and now it's been 2 years almost that the company is not able to do anything right. So as you can see, the dividend triangle right there, over the past 10 years, revenue was going up, earnings was pretty much going up all the time until we hit COVID, and then chain supply disruption happened. They had a lot of delays in manufacturing, and then they went into a lot of problems developing their new chips. Because you know, for a company like this, and it's pretty much the same thing for most tech stocks, technology innovation is the key. So you may be a leader today, but if you're not able to grow for the next 3 years and then find new ways to improve your technology and sell other things, well then you're gonna fall behind, somebody else is gonna take your place, and you can lose a lot of money very fast. You can see that right now, this is what's happening. Earnings going down, revenues going down, and then you start worrying what's gonna happen with the dividend. Well, I'm gonna get there in a moment, but for now, let's just say that they decided to pay a 5th consecutive quarter with the same dividend level, which is definitely a red flag. Even more right now, thinking that we are probably entering into a recession, the economy is not doing well that much, and the semiconductor is a cyclical environment. So it goes up, it goes down, and right now we are in a down cycle, meaning that revenues in 23 will not grow either. And this is one of the other reasons why the stock price declined so much last week. It's because on top of having a weak quarter, Intel reported weak guidance. And when you tell the market that what's coming up in the future is not going to be better than what happened in the past, nobody likes that, and then they just drop the shares. So one major problem that Intel has right now is it's falling behind. It used to be the leader in technology for several years, but now they're facing a lot of competition. One of them is called AMD, and AMD is going on the fast track. You can see that right here. Revenue growth is incredible while Intel is losing market share to AMD, especially in the data center. So what happened over the past few years is while the PC era was slowing down, at least they got another growth vector. Their business segment around data-centric products was growing very fast. And then all of a sudden, with the chain supply disruption and the problem in developing new chips and better chips that would work faster, now they're losing shares. So even this part that is supposed to continue to grow because the demand for cloud, the demand for data center is increasing definitely, but now they're losing those shares to AMD and other competitors. NVIDIA as coming into artificial intelligence, they have to face Taiwan Semiconductors in the foundries, and they see competition everywhere, and they're not winning their battle. Another thing I don't really like about Intel is on top of being a mature business that is slowing down, It is capital intensive. And the problem with that intensity of capital is they're spending a lot of money in R&D. They're spending a lot of money in mergers and acquisition because they want to expand into artificial intelligence. And they also need a ton of money to create those new foundries. And when we talk about foundries, we talk about those manufacturer plants for semiconductors. So those chips per processor, they need billions of dollars in investment to create a new factory plant, and this plant will only be good for a few years because after that you need more technology and then it evolves and you need to put even more money into that. Taiwan Semiconductor is definitely the leader right now, and even though the US government comes with some projects that they want to manufacture a little bit more chips on American soil, it is far from being done right now, and Intel is very definitely behind, and it's going to cost a lot of money to go in. Right now, free cash flow is negative. So when you combine that view of the dividend triangle, well, revenue is slowing down, earnings per share slowing down, and free cash flow is negative, now you're thinking, what's going to happen with the dividend, right? So here's the thing for the dividend. When you look at the payout ratio, it is still under control. However, that payout ratio is going to increase very fast because management said, oh, we're going to lose money next quarter. So if they're losing money next quarter, what do you think is going to happen with the payout ratio? Earnings is going to continue to go down. Payout ratio is going to continue to go up. I just showed you that the company shows negative free cash flow. So then you have a negative cash payout ratio. So long story short, and then you see that at the very bottom of this graph, you see the long-term debt is going up. Chances are it's going to continue to go up in 23. What is not to like about debt going up when interest rates are also going up, right? It is not a good situation. Couple that with the fact that cash from operation is going down, and management said, you know what, now we have to focus on cutting down costs. They expect to save $3 billion in 2023. Those cuts will have an impact. And the other thing is they decided not to increase their dividend. So will they increase their dividend in 23? Usually they increase it for the first quarter of the year. They already stated, you know what, 36 cents and a half per share. That's what you're gonna do. That's what you're gonna get as a shareholder, and that is it. So for all those reasons, I am very concerned about Intel. Never been one of my favorite tech stock, to be honest. I don't have it in my portfolio or anything. But right now I look at it and I'm like, you know what? You had that opportunity to not be a dividend trap anymore, and then you just fall back into it. Before I get myself interested in this stock, it will require strong revenue growth, strong earnings growth, and a business model that is set on growth vectors. I don't see that right now. I'm definitely not interested, and technically, if I had shares right now, I would sell. It's not a recommendation, but honestly, there are so many great companies in the technology sector that I would not bother with Intel. I think that Intel is getting slowly but surely going to look like another IBM, where IBM is not very, like, they're surfing on this strong reputation. They look very good on paper, but they're not able to deliver something that is interesting. I think Intel is going to fall into that category going forward. So now I would like you to tell me what you like about Intel, if you like something, or maybe you don't like it like me and you prefer other tech stocks. So let's go in the comment section. Let me know what you think about Intel. What do you think about the future of Intel? Because I know there will be a lot of demand for those microprocessors, and the US government wants to have them done in America, but I just don't see it happening with a lot of profit, and that is the main problem. I mean, you can have a lot of demand for your product, but if you cannot generate some profit out of it, it's not really worth it, right? So, all right, hit me up in the comment. Let me know what you think about Intel, and until the next video, don't forget to stay invested.